A virtual coin worth nearly $20,000. It is still hard to understand, but Bitcoin is pushing its way into the mainstream with its recent surge in value. But what's driving it? And can it be sustained in an unregulated environment? This is Inside Story. Hello, I'm Kamahl Santamaria. So we're going to talk about Bitcoin today because, well, a lot of people are talking about it right now. The digital currency has moved from the fringes to more of the mainstream, particularly in the past few weeks, because its value has risen at such an extraordinary rate. We're talking around the $20,000 mark at the moment. And just like a surging stock, it's left a lot of people wishing they'd either got in earlier or wondering how they can jump on board now. As ever, though, there are questions, some of which we hope to answer in this program. Questions about how safe it is, how to regulate something which by its very nature is decentralized, and if it's just another bubble waiting to burst. We appreciate that not everyone is up to speed with exactly what this phenomenon is all about. So here is a quick explainer. Bitcoin is a virtual currency, which means it's created by computer code. There are no middlemen, so there are no transaction fees. You don't need to give your real name. And there's no government control. This is what we mean when we say decentralized. And that makes Bitcoin perfect for illicit sales. But recently, more officially, businesses are starting to accept them simply because they are becoming increasingly popular and therefore more valuable. When it started back in 2009, one Bitcoin was worth less than 1 cent as of Monday. One costs about $19,000 according to Coinbase, which is a digital currency exchange based in San Francisco. Now, to go back to one of those points, Bitcoin appealing to many because of its lack of regulation. But governments are starting to take notice. For example, the French finance minister, Bruno Le Maire, said on Sunday that he is going to propose to the next G20 president, Argentina, that at the G20 summit in April, we have a discussion all together on the question of Bitcoin. There is evidently a risk of speculation. We need to consider and examine this and see how we can regulate Bitcoin. So here is the panel for today, starting in Cambridge with Garrett, who is an economic historian at the University of Cambridge and the London School of Economics. On Skype from Sydney, David Vaile, co-convenor of the Cyberspace Law and Policy Centre at the University of New South Wales, and in Berlin, Joerg Platzer, who is, among other things, the owner of Room 77, a restaurant and a bar that first accepted Bitcoin way back in 2011. Gentlemen, welcome. Nice to have you with us. In the interests of transparency, I need to start with this. We can see you all in vision at the moment. Hands up if you own Bitcoin, just in the interests of transparency. Okay, so we've got Berlin and Cambridge with Bitcoin and Sydney doesn't. I just do that, and for the record, I don't either. Just in the interests of transparency, we think it is important that we do with this for the discussion. So, Garrett, let's start with you first of all. The price surge. I want to deal with the news headlines at the moment. This price surge, what is driving it? The fact that, as I said, over a good number of years, it's gone up from almost nothing to 19,000. But the fact that November 29, it was about 10,000, and today it's 19,000, that seems to me to be quite extraordinary.
It is extraordinary, but it's not unprecedented in Bitcoin's case. We've seen massive price run-ups in 2011 and also at the end of 2013. At the end of 2013, that was the first time Bitcoin really came onto the mainstream media's radar screen. And I think your viewers should be advised that both after the 2011 and 2013 run-ups, Bitcoin's price lost nearly 90% of its value. So what can go up quickly can certainly go down quickly as well.
Yes, something I do want to deal with later on. I'll just stay with you a moment. Garrett, what is driving, I mean, we can see what's driving the price, but where's the interest coming from right now? Why such a surge in interest?
Right, so there's a number of things that have been propelling Bitcoin's price higher. Most recently is the adoption of an introduction of futures markets by Wall Street firms like CME, CBOE, and NASDAQ next year. I think this is seen as a major development for Bitcoin and a legitimizing development of Bitcoin and cryptocurrency as a new asset class. Many people think these future markets are going to pave the way for exchange-traded funds, ETFs, to come next year as well. And we're seeing also survey data indicating that millennials A third of millennials here in the UK, according to a recent survey, are looking to invest in cryptocurrencies. So there's a number of things, but I think Wall Street's embrace is clearly the biggest factor right now.
David, Vaile and Sydney, you are probably the more cautious of our three guests, so let me come to you to ask you this. Do you feel that the general public really does understand this? Or that, I mean, hopefully watching a program like this, they will learn more, but maybe they're just more interested in the fact that the returns are so good at the moment?
Well, the returns are obviously what is driving everybody nuts. It's the fear and greed working together, the fear of missing out, and the idea that maybe you can get on the bandwagon. I think everybody should take a deep breath and just step back for a moment. But don't listen to me. I don't own a Bitcoin, so I've missed out on that capital gain. But the problem is complexity and the sheer strangeness and weirdness of the underlying technology, and therefore the great difficulty. And I've seen stories in The Economist of people starting to say an exchange-traded fund, a futures derivative of this sounds very much like a great thing that would call everybody in, but how could you possibly value it? What's behind it? Where's the, I suppose, the backing in terms of any assets, but also where's the protection in case some exchange operator just decides to take your money and go? And so from a consumer protection perspective, or even an investor protection, if we treat this as a speculative asset rather than a currency, the question is, how can you tell? You know, how can you make a rational and well-informed sort of estimate of the sort of risk that you're looking at? Really, I think it's almost impossible for even the experts. I was gobsmacked by a computer science seminar I went through with the professor of computer languages at UNSW last year, and even the experts, the cryptographers, the maths PhDs they had their mouths hanging open trying to digest the deep weirdness of the underlying technology. And so I still feel that I only just am scratching the surface of my own ignorance of all of the different sorts of factors that could come in here. So I really have a worry for the taxi driver or the hairdresser who's heard about it last week and suddenly wants to jump in.
I like the points that you raise, and I think Joerg Platzer in Berlin is the perfect person to put them to. Joerg, David talks about complexity and deep weirdness. Well, just give me your response. As someone who has used Bitcoin for a long time and used it in a commercial sense as well, tell me your thoughts.
So everything we hear about the complexity and weirdness of Bitcoin right now, we have heard before, about 25, 30 years ago. And then people were talking about this weird thing called the internet. Bitcoin is hard to explain. It is a very complex technology, and it takes about as much time to understand it as it took back then to understand what is an email and how is a web server functioning and things like that. But the usability of Bitcoin increases with an incredible speed. And we start seeing people using Bitcoin even without knowing that they use Bitcoin. Like people today use Facebook without actually understanding that they're using the internet. So I think we're pretty much on the right path here.
Maybe you should explain to us then, in your own experience, how it works. If you're saying it's actually simpler than it is, if I owned Bitcoin and I came to your restaurant in Berlin and I wanted to pay with it, how easy or difficult is that? And yeah, go ahead, explain it.
Well, you're talking about the usability aspect
Exactly.
of Bitcoin, which is very, very easy. You come to our restaurant, you ask for your bill. Our staff will present you a QR code that you scan with your mobile phone. That gives you our payment address and the amount to be paid. You check it, you click on send, and then we have the money irreversibly. Not like with credit cards, there cannot be any chargebacks or anything like that. So the actual use of Bitcoin is totally easy, but that does not explain you how it actually works. It's like you can use your email client very easily nowadays without understanding how the internet works. So I wouldn't think that in the future everybody will know every technical detail of how the Bitcoin network works, just like today nobody really knows what TCP/IP and all these technologies underlying the internet function.
Garrett, Hileman,
the actual
Cambridge.
use case is totally easy. It's easier than...
Sorry to interrupt you,
Right.
Joerg. I just wanted to put some of
Go
that.
ahead.
Garrett Hileman joining us in Cambridge. Basically, what Joerg seems to be saying here is the usability is there, and people should use it without fully, well, that it's not so important to fully understand the technology behind it. What do you reckon?
Well, I think, people are a little more trusting of the underlying technology of email because it's just email. But when it comes to money and wealth, I think people are a bit more conservative and do want to know a little bit more about how something like Bitcoin works before they put more, say, resources into it or use it. So I don't know that the analogy is a perfect one, but I take the point. It doesn't necessarily need to be where everyone understands how blockchains work and so on. I also think that many people find Bitcoin still difficult to use. If you go into a pub here in Cambridge, like I have, and try to pay with Bitcoin and you don't have an internet connection, it's very difficult to actually complete that payment. QR codes are something that more and more people are getting used to using. Apple Pay and other digital payment systems are becoming more popular, but still paying with your smartphone is not something that a majority of people are doing. So there is a usability challenge as well. People need to learn how to use this new technology before it becomes adopted beyond the tens of millions of people who are using it right now.
David Vaile in Sydney, how are you going with your complexity and weirdness now? You understanding a bit more?
Look, I don't want to be the devil's advocate, but I've been typecast as that, so I have to sort of respond. I think the comparison with email is very interesting. Like I've been trying to help people understand things and trying to simplify and provide usable sorts of technologies for a long time now. And the great thing about email is that it does have a real world analogy. Even the phone system and the email system are similar enough so that people can make their own conclusions like that. You've got a message, you pass it, that sort of thing. The problem for me with Bitcoin is that its fundamental nature is not even clear. So it's sometimes called a cryptocurrency, but in many ways it doesn't behave like a currency. It doesn't have some of the fundamental things. You can't pay taxes with it, and you can't also have any, I suppose, redress. It's not like it exists in anything other than as a chunk of data. I suppose that there's one issue there. If you lose that bit of data, you've lost the whole thing. It's not like there's a bank account, and I'm not a fan of banks. I've sued banks. I've almost driven banks to bankruptcy. But and so they're by no means ideal. But if you lose your bank card or something like that, you can go to them saying you've still got my money and you can get it back. I'm not suddenly at risk. So that risk, the physical risk of actually losing access to the single bit of data is something I think that's unusual for people. There's another question of the exchange rate. Like if the exchange rate's relatively stable and it's behaving like a currency, and it might go up and down at 1% sort of every so often, that's one thing. But if you're in a situation where it might go from $10,000 to $20,000 in a week, and maybe in a jump of $1,000 in an hour, if you've gone in to buy a cup of coffee, what's the exchange rate at the end? And there's also different exchanges, and so whose actually exchange rate do you use? And I suppose the final thing is that because it's not clear that it is actually a currency, many of the features actually behave more like an asset. And so the whole question about speculation, about bubbles, about sort of sudden disappearance of trust in the market, all of those sorts of things are unlikely to affect an email or to affect an ordinary sort of currency, if you're trying to use that analogy.
Okay, Joerg, in Berlin, I've seen you shaking your head, I've seen you nodding your head. Just a quick response for you before we move on.
There is nothing on the planet that you can hold so securely as a Bitcoin. The point here is you need a backup of your private keys. So people will learn to take computer security much more serious than they did so far. But bottom line, you cannot lose your Bitcoin if you have a proper backup. And nobody can confiscate your Bitcoin. Nobody can inflate your Bitcoin. Nobody can stop your Bitcoin payment with capital controls. and so on and so on. So Bitcoin, in fact, is the safest asset, the safest digital bearer asset that the planet has ever seen. I would like to also make a remark about the valuation and the question, is it a currency, is it a commodity, is it maybe a stock? It's neither of these. Bitcoin is a network, and because people are trying to apply the valuation mechanisms that they apply to stocks or currencies or anything like that, they cannot understand this immense growth that we're seeing. Bitcoin is a network. We need to talk about network valuation, not market capitalization. And network valuation follows Metcalfe's law, which means the value of a network increases exponentially with the amount of people using it. If you look at Bitcoin from Metcalfe's point of view, from Metcalfe's law point of view, you're not surprised by its growth. That's to be expected.
Gentlemen, we need to talk about the R word, and that is regulation, because governments are starting to talk about it. And really, I mean, I guess this is what appeals about Bitcoin, that it is decentralized. It's not regulated. Garrett, why don't I start with you there in Cambridge? How would you even, let's deal with the morals and the idea of regulation in a moment, but if it were to be regulated, how do you even start with something that is global, something that is virtual, something that is borderless?
Well, so in Bitcoin's case, it's been regulated at least as far back as 2013 in the United States when FinCEN issued their initial guidance. And actually that regulation led to an increase in Bitcoin's price, as regulatory announcements often have. And the reason is, again, once a regulator comes out and issues some guidance or incorporates Bitcoin in some way into an existing regulatory framework, it further legitimizes it. Now, not all regulatory announcements have been positive for the price. When China this year announced that it was shutting down exchanges, that caused a price drop. But Japan, has already passed laws formally recognizing Bitcoin as currency, and you're seeing businesses now, more and more businesses actually accepting Bitcoin in Japan. And Japan is the #1 country today for the trading of Bitcoin. So it's a bit of I think a myth that Bitcoin is not regulated. It's also a myth that it's a great mode of payment for the online dark web. There's been a number of successful prosecutions of criminals using Bitcoin online. And the country of Bulgaria, actually, which rounded up a criminal network, has over $3 billion US, or about 6% of GDP, I believe, of Bitcoin now in its possession. So it was able to seize this illicitly used, Bitcoin, and that's been a huge windfall for Bulgaria. So it's something that can be regulated, and typically it's being regulated at the point where it's converted into national currencies.
But Garrett, you're talking about, and this might be my stupid question of the day, so do forgive me, but you're talking about individual countries there with their individual rules when we have got a currency that is being traded all over the world and through the internet. So I don't know how the two come together.
Right. Well, I mean, if a country wants to ban Bitcoin, for example, it might be difficult to completely stamp it out of existence, prevent all citizens in a particular country from using it. But a country can, for example, ban the listing of Bitcoin wallet apps in the App Store and Android Store. It can, outlaw the existence of regulated exchanges and make sure banks aren't allowed to transfer funds into those exchanges, at least banks that are within that country's jurisdiction. I mean, there are various points of control that regulators can exercise to limit, the use. I mean, Bitcoin may be decentralized, but people are still centralized. And, if you know who's running an exchange or developing software, you can arrest that person if they're breaking the laws. And that's what we see happening in countries that have chosen to crack down heavily on Bitcoin.
David, does that put any of your, or allay any of your fears? I mean, the way Garrett describes it, there is regulation out there, and the Japanese are even setting the trend and almost turning it into a currency.
Well, if I can continue my theme of complexity, I've just started a survey, and we think we might limit ourselves to the top 30 or 40 countries, but to try to understand their responses to both Bitcoin and also to the financial transaction use of blockchain technology. So, for instance, the Australian share market has just decided to use the underlying technology blockchain for the settlement. And so what of the first preliminary sort of survey looks like an extreme variety of responses. So some countries are ignoring it. Some countries are just exploring one use but deprecating the others. Some are embracing it and actually legalizing it and moving towards making it an actual currency. Others are outright banning it or banning the things around the edges, the exchanges and the conversions. And so at the moment, it's a bit of a mess. I'm not sure that that's a bad thing. I suppose we should actually start off by saying there's a huge amount of ideology in the Bitcoin and in the blockchain world. There's a whole lot of inbuilt assumptions. A lot of it is, on one side, is very much a libertarian idea that sort of government is bad, unregulated markets are good. That to me is going not into the future, but going back to the 19th century. One of the great inventions of the 20th century was antitrust law, competition law, consumer protection law, banking controls and things that actually stopped the crazy and sort of out of control exploitation that you get in some sorts of free markets. So I'm neither a fan of a total free market nor of an over-regulated market. What's interesting is some of the conversations I've had with bankers and other sorts of people in relation to all sorts of information controls, and they often say, look, what we want is sensible regulation. It actually, as we heard before, in this case, improves the value of Bitcoin when you get this stepping in. And that is because I suppose the ideological purist position that regulation is bad doesn't actually match up with consumer reality, where you're completely, for instance, outclassed in terms of knowledge and sophistication, but you're also outclassed in negotiating and lobbying power compared to big businesses and also to those who run the Bitcoin scheme. You might actually like to have someone on your side, or to have some of the prudential regulations or the restraints on straight out rip-offs that have actually been developed in the last 100 years, rather than going back to the Wild West of the 19th century.
Joerg Platzer, we're starting to run down the clock, so I'll come back to you. Maybe if I get away from the R word, regulation, and use the P word, which David said, and that was protections. And he mentioned this before, the fact that it's not backed by assets. Oh, okay, go ahead. You've raised your finger there.
No, sorry to didn't mean to interrupt you, but yeah, regulation. As a matter of fact, the Bitcoin protocol is not regulated and can, by definition, not be regulated. That is a feature of Bitcoin. That is its whole purpose, and that's what gives it value.
Okay.
And that's
so
why
where is
people
sorry to interrupt you. Where is the protection?
It cannot be regulated, manipulated.
Where is the protection for the person who owns it?
You see, the person who believes in Bitcoin views the absence of regulation as their protection. The absence of regulation protects people from negative interest rates, from monetary inflation, from capital controls, from bank bail-ins. So I belong to these people who would like to be protected from these things, and the tool to protect yourself is Bitcoin. If you're talking about consumer protection, meaning like I should get my money back if the online shop didn't send me the parcel or something like that, these are things that can easily build on top of the Bitcoin network. But the Bitcoin protocol, the Bitcoin network itself, can never be regulated. It would stop being Bitcoin if that regulation attempts were successful.
Fascinating discussion, gentlemen. I thank you very much for your time. Garrett Hileman in Cambridge, David Vaile in Sydney, and Joerg Platzer in Berlin. And as ever, thank you for joining us. You can see this program again anytime by visiting our website at aljazeera.com. You can head to our Facebook page for further discussion as well. That is facebook.com/AJ Inside Story. Hop on Twitter as well. Our handle is at AJ Inside Story. I'm at Kamahl AJE. From me, Kamahl, Santamaria, and the whole team here, thanks for joining us. We'll see you again soon.